These videos are not financial advices. Everything shared here is provided for educational purposes only. Hello everyone, welcome back to another trading session. I finally found a trade to take. Okay, I got a better entry. This is a little doji break, but it's not only a doji break, it also is a third touch breakout. This is the first touch, second touch, and third touch is breaking this line. So we have third touch breakout combined with doji break. That's why I go for a double trade on this beautiful opportunity. And yeah, we're gonna have a nice little green candle as my first trade. I'm gonna look for other opportunities to see what. Okay. Have nice ranging market here. Let me just see. Yeah, this one's about to close. 2, 1. Nicely done. I'm gonna take a screenshot and put it in my journal real quick. Just like that. Oh, I forgot to change the amount. Sorry. This journal automatically counts and suggests you that 3% of your account, but I go with 6% almost. That's why I need to change it every time. All right. Let's see what we have here. Today's market is going. Today's session is going to be a very short session. Already took 2 trades. I should stop after 3 consecutive wins. Right now we are in 2 wins. All right, like this is a supply, right? It touched the supply, and now it reacted from the supply. And where's the next point in the chart that market can react? The closest thing we see is this order block. This is called order block. When you have a resistance or support previously respected and then strongly broken, you have to look previous breakout, which is this area of the chart. And then you may see some demand or an order block. So what is an order block? If you see a fair value gap, the candle before is going to be order block. And how can you trade this? Is you go to lower time frame, very simple, until you see some demand areas. For example, I'm gonna mark this one. It's already a missed setup, but I'm just explaining for you because I have a lot of questions. I've been asked a lot of questions about these concepts. Okay, we do have 2 demand areas in lower time, or we actually have. This one is even better, bro. Like, you see the green zone. If your entry is inside the green zone, it's going to be a lot better. Now let's go to 1 minute to see how it looks like. Okay, so in 1 minute time frame, it's going to look like this. The way we trade this is these red zones are our entries. Whenever the market comes inside, we get into the trade. We make sure the flag mode is on. The flag mode is so important because we want our trade to close exactly when the candle closes, just like here. Doesn't matter how many seconds remaining of the candle. We want it to close right on the candle close. So in this particular, we could have this entry and this entry. I would prefer this lower entry because it's inside the order block candle as the higher quality. Now market found it's another, territory for buyers to enter. This is a territory for sellers to take over, which they did. And now the buyers started riding the price right now. Now, according to classic Fibonacci levels, this spike should have similar movement after the retracement, which is going to be this one. We need to think now and consider the next movement is going to be this one, even though we're not sure if it's going to start from right here. It may play a little bit, and this could be considered from retracement and then start. Okay, we don't know that yet, and one way to find out, we need to wait. All right, so the we now the priority is just thinking bullish on this particular chart, because last time it touched here, and the next close area for seller is going to be this one. This is an order block again for sellers to react, but it's weak. That's why I didn't really consider it, but it seems that it's pretty strong. We never know. Sometimes these are also a good point for market to react. Maybe the next scenario for me is going to be a reaction from this this order block to the next entry point of this order block down here, okay, and then start the main movement, which is another scenario for me. If it closes down here, that scenario will be the higher probability, especially now that we have this QM zone. You know that this is a QM zone, right? It's not only an order block right here, we have another setup, which is the QM and the trend line. Okay, so this is the trend line. This is the QM. Now let's see if we have the higher time. Yeah, we do have a huge engulf for the QM now. But the problem with the QM is this entry, if we consider for QM, it's almost outside the engulf. We want always the entry for QM inside the engulf's higher time frame confirmation, which is this engulf, right? So that red zones are entries point for the decision point I told you at the beginning, also the QM. Okay, so for the QM, it didn't really touch, you know, unless there's something. Okay, we don't have anything, and it didn't touch the entry. Even if it was touching the entry, I wouldn't be 100% sure about this. So you see this, according to Fibonacci, we had similar movement. Now that's another confirmation for me to know that there's high chance for market to come back up and complete the cycle of having same movement. Now that it touched this, and if it touched this, we have everything to push up. Okay, if it doesn't respect this, that's another scenario, which will have another drop like this, big movement down here. Okay, so the market is going to be downtrend in the bigger picture if it doesn't respect this. You know what? I'm gonna take it with a 200. Very small. Let's go 11 seconds. I don't trust this because it's outside the engulfing pattern, and that's going to be a losing trade. Okay. If you know, if you want to know more about QMs, you need to watch this video pops on the screen. That's a full QM guide, and it will tell you that if your entry zone, okay, entry zone, it's outside the higher time frame engulf, it's high risk to take the QM. You should take it with 1/5 or your regular amount. This is the only way you can manage your risk in binary option, right? So yeah, let's go. That was a. See, the market is pretty nice. The movements are pretty good. Yeah, the thing is, you need to always control your risk. If I was taking that with my regular amount, I would be down 1,000. Like, I already have 2 winning trades for 1,000, but that would be like crazy amount to just lose on that trade. I'm gonna look for the opportunity. I don't see much. Okay, now it seems that it's going to start the main movement. Okay, remember this chart. Remember, it's going to be this movement until the next area, which is going to be something above, something like this, up here, right? We'll see. Alright, I'm gonna take a trade on this one, and I want to take a beautiful entry. Okay, yes, we do have a beautiful entry up here. If price spikes up to this, I'm gonna take that entry point. That's a beautiful and lower time frame entry for the order block. Okay, beautiful. So again, if you look at this chart, it's pretty obvious, right? I'm gonna analyze this chart for you as well. So listen carefully. I'm gonna take a screenshot before even it closes, because I know it's a beautiful winning trade because of our margin of safety. Now look at this gap down. This gap down is the cause of this being print, but our entry was beautiful. Something in lower time frame, something inside this complication gave us that entry. So I'm gonna just put this. First of all, let me just add the 200. I forgot to take a screenshot. And then add my main trade. Beautiful. Let's go. We got 4 trades, right? Beautiful. And now I'm going to analyze this chart for you, so listen carefully. If first thing in analyzing the chart, we need to see where the market is reacting from and why. So if I draw these two, these are the potential areas in the chart that market can react. Okay, just like this one. Okay, just like this one. Just like this one. See, order block, see? Now, the reaction from this zone is this much, okay? Sometimes the reactions are small, sometimes the reactions are big. So if I have a setup here, okay, imagine this candle is at some kind of doji. And I see this setup, it's broken, it's a doji break. And then I know that this is a point that the market can react. So I have an idea and I go to a lower time frame and I have a potential buy trade right inside. Boom. Okay, I make it red. Let's go to 1 minute and this is going to be my entry. Close above. What is my confirmation for this? If you look closer, there's a gap down. Okay, you know, gap down, buyers. Gap up, sellers. Now, I move forward. Okay, we do have a very tight price channel, broken strongly. And right before the breakout, we were also breaking the doji right here. So that's a doji break. What else do we have? We do have this little order block right here, which market can react. Again, remember, what is order block? Fair value gap, the candle before, causing something. Okay? Causing something. We do have this demand, and now it's broken by this force. What is causing it? This order block. Now, if I go to lower time frame, I will see something inside that lower time frame. But why this is a green candle? Because we do have gap down. Remember, gap down, buyers, and gap up sellers. I have a lot of videos about, you know, explaining about gaps. It may pop up on the screen. Go watch in the channel, okay? Also, make sure you join the Telegram channel if you want to become a student and learn in a deeper level. Also, join Telegram channel. There's information and yeah, text support and say that you want to be students, and then they will guide you. Now, see, this is the order block. The market is already reacting. Where is the next reacting point in the chart? Is this one? Yes, it can give us a minor reaction. Where's the main one? The main one is down here for a reaction. So there's a concept in Forex. They say liquidity, right? When market respects to a level too much, it creates liquidity right down here, meaning the classic buyers is going to buy on this support. But the liquidity, and they put their stop loss down here. We don't have stop loss in binary. I'm just explaining for you to know. And the market makers, what they do is they want to stop them out. So they push it hard and they all get stopped out. Once they get stopped out, a lot of buy orders become triggered. And then they touch a demand, something right here, and boom, they spike up like crazy, okay? That pretty much what is about to happen in this chart. I'm going to stop right here. I hope you enjoyed, man. Do not forget to join the Telegram channel, and peace out.